Welcome back to LexTalks Legal Topics Simplified, where we break down the complexities of Indian law and make it accessible for everyone.
We're here to transform dense legal jargon into engaging conversations and insightful discussions.
And today's deep dive is going to focus on something that might seem a little ordinary at first, but trust me, there's a lot more to it than meets the eye. We're talking about types of customers and bank accounts in India.
Absolutely. We use banks every day, but most of us don't really stop to think about the legal mechanisms behind all those transactions.
That's right. And this deep dive is all about pulling back the curtain and revealing those hidden layers.
So let's kick things off with a fundamental question. What exactly is a bank account? We all have them, but from a legal standpoint, what's going on there?
Yeah, I've always thought of it as a place where my money is kept safe, like a virtual vault.
Well, it's not quite as simple as that. In legal terms, a bank account is less about storing your money and more about a contract between you and the bank. When you deposit money, it actually becomes the bank's property.
Wait, so the bank owns my money?
In a way, yes. But in return for you giving them your money, the bank gives you a claim against them for that amount. They're obligated to pay you back when you demand it.
Okay, so it's more like I'm lending the bank my money and they promise to return it when I need it.
Exactly. And this creates an interesting duality in accounting.
Duality. Tell me more.
For you, the account holder, the account represents an asset. It's a claim you have against the bank. But from the bank's perspective, your deposit is a liability, something they owe to you.
So one transaction creates both an asset and a liability. It's like two sides of the same coin.
Precisely. Now let's shift our focus to the folks who are using these accounts. The customers. Our research tells us that banks in India cater to a remarkably diverse range of customers.
Yeah, it's not just individuals, right? There are businesses, organizations, and even special categories like minors.
Right. Let's start with the most common type, individuals. That covers pretty much everyone, from everyday people to high net worth individuals.
And we all use a wide range of banking services, don't we? From basic savings accounts to more sophisticated investment products.
Exactly. But let's not forget about a special category of individual customers. Minors. In India, anyone under 18 falls into this category.
So how do minors open bank accounts if they're not legally allowed to enter into contracts?
That's where the role of a guardian comes in. Minors can open accounts jointly with a parent or a legal guardian who manages the account until the minor turns 18.
So it's a way to give young people a safe and supervised introduction to managing money.
Exactly. Speaking of joint accounts, we came across a few variations like either or survivor and jointly operated accounts.
Yeah, I've heard of those, but I'm not entirely sure what the difference is. And why is it so important to understand the distinction?
Okay, so let's say a couple has a joint account. If it's an either or survivor account, either person can operate it independently. And if one person unfortunately passes away, the survivor automatically gains full control of the account. But with a jointly operated account, both account holders have to sign off on any transaction.
So the type of joint account you choose really depends on the dynamics of the relationship between the account holders.
Precisely. It's super important to discuss these options and figure out the best structure, especially when it comes to family finances or business partnerships.
Now, let's move beyond individuals and talk about businesses. I know there are different types of businesses that interact with banks in India.
Yes, starting with sole proprietorships, which are the simplest form. From a legal perspective, there's no distinction between the business and the owner. They're considered one and the same.
So that makes things pretty straightforward in terms of banking.
Right. But things get a bit more complex when we step into the world of partnerships.
Partnerships, like
Mhm.
two or more people running a business together.
Exactly. The Indian Partnership Act of 1932 comes into play here, and banks need to carefully review documents like the partnership deed. They need to determine who's actually authorized to operate the account.
So there are more checks and balances to make sure everything's above board.
You got it. It helps prevent unauthorized transactions and ensures that everyone is playing by the rules. Now, how about we talk about companies? Both private and public companies are key players in the business world.
And they have very specific requirements when it comes to banking.
Right. Absolutely. Since companies are seen as separate legal entities, banks need a bunch of documents to make sure everything is legitimate. We're talking board resolutions, lists of authorized signatories, and things like that. It's all about preventing fraud and making sure everything is transparent.
It sounds like corporate banking involves a whole other level of scrutiny.
It certainly does. And then we have those hybrid structures known as limited liability partnerships, or LLPs. They combine some elements of partnerships with the limited liability protection of companies.
So banks need to be extra careful to understand their unique features and how those impact account operations.
Precisely. It's all about making sure the right people have the right authority when it comes to managing funds. But it doesn't stop there. Our research also pointed to other customer types, like trusts and societies.
Trusts in societies. Now, those are interesting. What makes them unique as banking customers?
Well, trusts and societies are registered organizations that manage funds for specific purposes. So naturally, they have to adhere to a bunch of regulations and guidelines when it comes to opening and managing bank accounts.
It makes sense. After all, they're often handling funds that are meant for public benefit or charitable causes.
You're exactly right. And there's another important group of customers, non-resident Indians or NRIs. They have their own special set of account types designed to meet their unique needs.
Ah, yes, the NRE, NRO, and FCNR accounts. Those can be a bit confusing. But they're essential for anyone managing money earned both abroad and within India.
Absolutely. And last but not least, we have accounts for government and local authorities. As you might expect, those accounts are subject to very strict rules and regulations to ensure transparency and accountability in how public funds are being used.
Wow, it seems like the world of banking customers is incredibly diverse, with each type bringing its own set of legal considerations to the table. And speaking of those considerations, let's shift gears and explore the different types of bank accounts that are out there.
From the everyday savings accounts to those specialized ones designed for specific financial goals and investments, each one has its own unique features and legal implications.
Right, so let's start with the most familiar one, the savings account. I think we all know that it's meant for, well, saving money. But from a legal perspective, are there any key features that set it apart?
Well, besides the primary purpose of saving, a savings account typically comes with the potential to earn some interest, although the rates vary from bank to bank. Plus, there are usually minimum balance requirements and sometimes even limits on how many free transactions you can make each month.
Ah, yes. Those pesky minimum balance requirements. I know those all too well. So for someone who's expecting to make frequent transactions, a savings account might not be the most convenient option.
You're right about that. For businesses and individuals with high transaction volumes, the current account is a much better fit. It allows unlimited transactions, which is great for managing a steady flow of money.
Makes sense. But is there any sort of downside to having a current account compared to a savings account?
The main trade-off is that current accounts generally don't pay interest. They're more about transactional convenience rather than accumulating savings. However, they often come with overdraft facilities.
And overdraft facilities can be super helpful for businesses, right? Giving them a cushion to access extra funds if their account balance dips unexpectedly.
Precisely. But of course, it's important to use those facilities responsibly and to be aware of the associated fees and interest rates. Now let's talk about those folks who are looking for a more hands-off approach to saving and earning interest.
You're talking about fixed deposit accounts, or FDs, right?
Yeah.
Where you basically park a lump sum of money for a set period and earn a predetermined interest rate.
Exactly. FDs offer higher interest rates compared to savings accounts because you're essentially lending your money to the bank for a longer time period, which does come with a slightly higher risk for you.
So it's a trade-off. Higher potential returns in exchange for less flexibility in accessing your funds. What about people who want to save regularly, but maybe they don't have a big lump sum to invest up front?
That's where recurring deposit accounts, or RDs, come in. You deposit a fixed amount on a regular basis, usually monthly, and earn interest on the growing balance. It's a great way to build up your savings gradually, and you still get a fixed interest rate for the entire term.
It sounds like RDs could be a great option for those who are disciplined and want to grow their savings over time with a predictable return. So we've covered savings accounts, current accounts, FDs, and RDs. What other interesting account types are out there?
Well, one that comes to mind is the demat account. Unlike those others, it's not about the traditional banking services like deposits and withdrawals. Instead, it's all about holding securities electronically.
Demat accounts. So that sounds like something for investors and those interested in the stock market.
You've got it. Demat accounts are actually mandatory for trading in stocks and shares these days. They eliminate the need for those old-fashioned physical share certificates, making trading much more efficient and secure.
So they've really brought about a lot of positive changes in the world of investing.
They have. Are there any other specialized accounts we should talk about? Of course. There are salary accounts, which are directly linked with employers, making it easy for them to deposit salaries. These accounts often come with cool perks like No minimum balance requirements or extra benefits like loans and insurance.
Oh yeah, those perks can be pretty tempting. And what about accounts tailored for specific demographics, like senior citizens?
You're right. Banks offer senior citizen accounts with features like higher interest rates and discounts on services such as locker rentals. And there are also accounts specially designed for women, students, and even kids, each with its own set of benefits and features.
Wow. Banks have really gone all out in creating specialized products to meet diverse needs. But with so many options, how on earth does anyone choose the right account for them?
That's a great question. Picking the right account depends on a bunch of factors: your financial goals, your typical transaction needs, the returns you're hoping for, and even just practical stuff like online banking capabilities and ATM availability.
So it's not just about finding the account with the highest interest rate. You really have to think about how it fits into your overall financial plan and lifestyle.
You got it. It's all about finding that sweet spot where your needs and the bank's offerings align perfectly.
It's amazing to see how interconnected the world of banking customers and bank accounts is in India. Each type of customer, from a young student opening their first account to a large multinational corporation, has specific needs that the banking system needs to accommodate.
It's like this intricate web where the legal framework provides the foundation, banks act as the facilitators, and customers navigate this landscape to reach their financial goals.
And speaking of navigating that landscape, we touched on joint accounts earlier, but I think it's worth diving a bit deeper into their legal implications.
One crucial aspect to consider is the idea of joint liability, particularly when it comes to things like debt or loan obligations attached to the account.
Oh yeah, I've heard stories about one person in a joint account racking up a ton of debt and leaving the other account holder on the hook. Is that really how it works?
It can be, especially in a jointly operated account. In that scenario, each account holder is equally responsible for any debts that are incurred, even if they weren't directly involved in the transactions that led to the debt.
So it's not just about sharing the convenience of an account, but also sharing the responsibility for any financial obligations tied to it.
Exactly. It really underscores the importance of choosing your joint account partners carefully and having open and honest conversations about money matters. Having clear instructions on how the account will be operated can prevent a lot of headaches down the road.
It's a good reminder that even those seemingly simple financial decisions can have some pretty significant legal consequences. Trust and transparency are just as crucial as the legal framework itself.
Absolutely. And this principle extends to other types of customer relationships as well. For example, when banks are dealing with companies, they rely heavily on the concept of authorized signatories.
Those are the individuals appointed by the company to manage the account and carry out transactions on the company's behalf, right?
Precisely. Banks have a very thorough process for verifying the identity and the authority of these signatories. They need to make sure they're operating within the scope of their assigned roles.
So it's like a series of checks and balances to protect both the bank and the company from unauthorized activities.
You got it. It minimizes the risk to financial harm and really reinforces the importance of legal oversight in all banking operations. From individual accounts to those more complex corporate structures, legal considerations really are woven into every aspect of banking.
We've explored the diversity of banking customers, talked about the complexities of joint liability, and touched on the vital role of authorized signatories. What stands out to you as the most important takeaway from all of this?
I think what strikes me is the sheer diversity of the Indian banking landscape. It's incredible. We have a system in place that's designed to accommodate such a wide range of financial needs, from individuals and minors to these intricate business structures and specialized entities like trusts and societies. It's a real testament to the inclusivity of our financial system.
And it's really impressive to see that this diversity is backed by a robust legal framework that protects both banks and customers, ensuring fairness and transparency for everyone involved.
Exactly. When individuals and businesses understand the legal nuances, it gives them the confidence to navigate this complex world and make smart financial choices. Now, how about we shift gears a bit and delve into the heart of the banking world, the relationship between the bank and the customer?
I'm all for it. What legal principles govern this relationship, and how do they impact the rights and responsibilities of both sides?
Well, at its core, the bank-customer relationship is rooted in contract law. When you open an account, you're essentially entering into a legally binding agreement with the bank, where you agree to abide by their terms and conditions.
So it's more than just filling out some forms. It's about establishing a formal agreement that clearly outlines what each party can expect from the other.
Precisely. This contract covers pretty much everything from the type of account and its features to fees and procedures for transactions, and even the bank's responsibility to keep your funds safe and secure.
I know that banks have a duty of care towards their customers. Can you elaborate on what that means in practice?
Absolutely. The duty of care essentially means that banks are legally obligated to act in the best interests of their customers. They have to demonstrate a reasonable level of skill and diligence in managing those accounts. This includes things like maintaining confidentiality, providing accurate statements, and safeguarding accounts against unauthorized access or fraudulent activities.
So if a bank were to breach this duty of care, could they face some serious legal ramifications?
Without a doubt, customers absolutely have the right to seek legal remedies if a bank fails to fulfill its contractual obligations or violates its duty of care. It's a critical component of holding banks accountable and making sure there's fairness within the relationship.
That's good to hear. It's reassuring to know that the relationship isn't one-sided. Customers do have legal protections and avenues for recourse if the bank doesn't hold up their end of the bargain.
Precisely. This whole concept of reciprocity is essential to maintaining trust and ensuring a level playing field within the banking system. Both parties have rights and responsibilities that need to be respected.
Now let's dive into some specific legal aspects of the bank-customer relationship. One that often comes up is the bank's duty of confidentiality. How far does this duty extend, and are there any exceptions?
The duty of confidentiality is paramount in banking. Banks are legally bound to protect the privacy of their customers' financial information and all their transactions.
So I can rest assured that my bank won't be sharing my account details or transaction history with any third parties without my explicit consent.
As a general rule, absolutely. However, there are a few exceptions. For instance, if there's a suspicion of illegal activities like money laundering or fraud, banks are required to disclose information to law enforcement agencies or regulatory bodies.
Right, that makes perfect sense. It's about finding that balance between protecting individual privacy and upholding the law.
Exactly. Banks might also be required to disclose information to comply with court orders or as part of legal proceedings. So while the duty of confidentiality is strong, it's not absolute.
It's good to know that there are these carefully regulated procedures for disclosure, which help to prevent any unnecessary breaches of privacy. Let's shift gears and talk about another area where legal considerations come into play: bank charges and fees.
Of course, banks are entitled to charge fees for the services they provide, but those charges need to be reasonable and transparent. The Reserve Bank of India actually has guidelines in place to regulate these charges. Banks are obligated to disclose these fees upfront to their customers.
So no sneaky hidden fees or outrageous charges that suddenly appear out of nowhere.
Ideally, no. Transparency is crucial for making sure everything is fair and preventing banks from taking advantage of their customers. If a customer believes they've been charged unfairly, they absolutely have the right to file a complaint with the bank and even take it further to the banking ombudsman if needed.
It's great to know there are ways to address these issues if customers feel their rights have been violated. It seems like the legal framework surrounding banking is designed to protect both parties and ensure fairness and transparency.
You've got it. Now, how about we turn our attention to a topic that's become increasingly important in today's digital age: online banking.
Online banking has undoubtedly revolutionized the way we manage our money, but I can imagine it presents some unique legal challenges.
You're absolutely right. Security is probably the biggest concern. Online transactions are susceptible to cyber attacks, phishing scams, identity theft, you name it. Banks really need to have top-notch security measures in place, like strong passwords, multi-factor authentication, and robust encryption technology, all to keep their customers' accounts and information safe.
And it's not just on banks to implement these security measures, right? Customers also need to play their part.
Absolutely. Customers need to be proactive about their online safety. Avoid clicking suspicious links, be extremely careful about sharing personal information, and get into the habit of regularly checking your accounts for any unusual activity. It's a shared responsibility to ensure the security of online transactions.
Another challenge, I imagine, is ensuring the validity and enforceability of those electronic transactions. Unlike those traditional paper-based transactions, online ones leave this digital trail, which could be tricky to trace or authenticate.
You're sharp! But to address that, India has implemented laws like the Information Technology Act, which gives legal recognition to electronic records and signatures. This essentially puts online transactions on par with their offline counterparts in terms of legal enforceability.
So even though there's no physical exchange of documents or cash, the legal framework has adapted to make sure those online transactions hold up in a court of law.
Exactly. It's all about bringing those legal principles into the digital realm to build trust and maintain order within the online banking ecosystem. Now, let's talk about the big player in all of this, the Reserve Bank of India, or RBI.
The RBI, they're like the guardians of the financial world, right?
Yeah.
Making sure the Indian banking system is stable and running smoothly. Can you tell us about their key powers and responsibilities and how they impact the bank-customer relationship?
The RBI has a wide range of powers, including issuing licenses to banks, setting interest rates, regulating foreign exchange, and overseeing all those banking operations. They're essentially the watchdogs, making sure banks are playing by the rules and protecting the interests of both the economy and the customers.
So they're not just regulating banks, they're actively working to shape a financial system that's accessible, fair, and ultimately benefits everyone.
Precisely. The RBI's initiatives aimed at consumer protection are particularly important. They've got guidelines in place to guarantee that customers are treated fairly. This includes transparency in fees, prompt resolution of complaints, and mechanisms to seek redress if something goes wrong.
So the RBI isn't just some distant, faceless regulatory body. They're actually playing an active role in safeguarding the rights of every banking customer.
Absolutely. They also encourage financial inclusion, pushing banks to reach out to those underserved populations and promoting financial literacy.
It's impressive how multifaceted the RBI's role is. Everything from maintaining that big picture economic stability to protecting the interests of the individual customer. Now, let's get into some real-world scenarios where these legal principles come into play. Let's say a customer loses their debit card and someone uses it to make some unauthorized purchases. What happens then?
The most important thing is for the customer to report that loss to the bank immediately. The bank then has a duty to block the card and prevent any further unauthorized transactions. The RBI has guidelines that address customer liability in these situations. If the customer acts quickly and reports the loss promptly, their liability is usually limited.
So there's a bit of a safety net for those customers who act responsibly. But what if the customer was careless with their card or PI?
If it's a case of negligence, the customer's liability might increase. It's a good reminder that both parties have a role to play in ensuring the security of those transactions. Now let's switch gears. Imagine a bank accidentally credits a customer's account with a big chunk of money that doesn't belong to them.
Sounds like winning the lottery. But can they actually keep the money?
It might feel like a sudden windfall, but legally they're obligated to return the money to the bank. Keeping it would be considered unjust enrichment, and the bank has every right to recover the funds.
So honesty is always the best policy, even when it comes to banking errors. Now let's talk about a situation that's every depositor's worst nightmare. What if a bank collapses?
That's where deposit insurance comes in. In India, we have the Deposit Insurance and Credit Guarantee Corporation, or DICGC.
So even if a bank goes bankrupt, the customer's money is protected.
To a certain extent, yes. The DICGC currently insures deposits up to 5 lakhs per depositor per bank. It's a significant safety net, offering peace of mind in the face of a bank failure.
We've covered a lot of ground today, from the ins and outs of the bank-customer relationship to the critical role the RBI plays and those specific challenges of online banking. I think it's clear that understanding these legal aspects is essential for individuals and businesses alike to navigate the banking system effectively and protect their financial interests.
It's been a comprehensive exploration, highlighting how law, finance, and technology are intertwined in the Indian banking landscape. As we move further into this digital age, it's going to be even more crucial for everyone to stay informed and adapt to the evolving legal framework.
We've really journeyed through the complexities of bank customers, their accounts, and the legal framework that governs everything. It's incredible how dynamic the Indian banking system is. It's constantly evolving to meet the changing needs of its users.
And technology is one of the biggest drivers of that evolution. We talked about online banking, but the wave of innovation goes way beyond that.
It's true. We're seeing mobile banking, digital wallets, and even blockchain technology finding its place in financial services. It's pretty exciting, but it definitely raises some important questions.
Absolutely. And as these advancements keep coming, we have to consider a whole new set of legal implications. For instance, how can we guarantee data privacy and security in this increasingly digital world?
It's a huge question, especially with so much personal and financial data being generated and transmitted online every second. It feels like this delicate balancing act. We want to harness the power of technology, but we have to protect sensitive information.
You've hit the nail on the head. That's where legislation like the Personal Data Protection Bill comes in. It aims to create this robust framework for how personal data is collected, processed, and stored, and that includes all that crucial financial information.
It seems like a much-needed step in the right direction, especially as we're entrusting more of our financial lives to these digital platforms. But does it address the complexities of international transactions and data flow?
That's a really important point. The bill definitely raises questions about jurisdiction and cross-border data flows. How do you regulate and enforce data protection when transactions and information are crossing national boundaries? It's a tough challenge that lawmakers and regulators are grappling with all over the world as technology keeps outpacing those existing legal frameworks.
It is fascinating and a little bit daunting to think about the legal complexities of our increasingly interconnected financial world. So with all these changes happening, what are some key takeaways for our listeners when it comes to protecting their financial interests?
I'd say first and foremost, knowledge is power. Be informed about the terms and conditions of your accounts, understand your rights as a customer, and be aware of the risks associated with different banking products and services.
Don't just blindly sign those documents. Read that fine print and don't hesitate to ask questions if anything is unclear.
Exactly. And be proactive when it comes to your online security. Strong passwords are a must. Be super careful about sharing personal information online and get into the habit of checking your accounts regularly for any suspicious activity.
Vigilance and awareness are our best defenses in this digital age. It sounds like taking an active role in managing our finances and staying informed is key.
Absolutely. And if you do run into any problems, don't hesitate to file a complaint with your bank. Remember, you have rights. There are mechanisms in place to address grievances and seek resolutions.
It's good to know that we're not alone in this complex world of banking. We have resources and a legal framework to protect us. Well, as we wrap up this deep dive into types of customers and bank accounts in India, is there one final thought you'd like to leave our listeners with?
The legal side of banking can seem overwhelming, but in the end, those rules and regulations are there to ensure fairness, transparency, and stability in the financial system. By understanding those basic principles, we can all engage with the banking system confidently, knowing that our interests are protected.
That's a great way to put it. And as the banking landscape keeps evolving, staying informed will be crucial for all of us. We need to navigate those changes and take advantage of the opportunities that come our way.
Absolutely. The world of finance never stands still. It's always changing. And continuous learning is the key to making those smart financial decisions. It's the key to thriving in this dynamic environment.
Couldn't agree more. Thank you so much for joining me on this incredibly insightful journey into the world of Indian banking law. And to all of you listening, thank you for being here. Don't forget to subscribe to LexTalks for more deep dives into the fascinating realm of Indian law. We're here to break down complex concepts and make legal knowledge accessible to everyone.